Thanks to all who have joined us by WebEx for standing by. Welcome to the open meeting of the. During the meeting, you will be in listen-only mode. As a reminder, this meeting is being recorded and a recording is expected to be made available on the PCAOB's website. I would now like to turn to Chair Williams to formally convene the meeting.
Good afternoon and welcome, everyone. This is an open meeting of the Public Company Accounting Oversight Board on November 14th, 2024. We welcome those of you who have joined us today by webcast or dialing into the teleconference. Before we proceed with the agenda, I will note for the record that all board members are participating in this meeting and we are able to hear one another. The only order of business before the board today is a staff recommendation that the board adopt an amendment to an existing rule relating to its registration program. The amended rule would permit the board, under specified conditions, to treat a registered firm's failure both to file annual reports and to pay annual fees for at least 2 consecutive reporting years as a constructive request for leave to withdraw from registration and to deem the firm's registration withdrawn. To present the staff's recommendation, I will turn to our General Counsel, James Capoli.
Good afternoon, Chair Williams and board members. The Office of the General Counsel is pleased to recommend that the board adopt a rule amendment related to the PCAOB's registration program. The amendment would introduce a new procedural mechanism to withdraw from PCAOB registration firms that have ceased to exist, are non-operational, or no longer wish to remain registered. New paragraph H of existing Rule 2107 would permit the board, under specified conditions, to treat a firm's failure to both pay annual fees and file annual reports for a minimum of 2 consecutive reporting years as a constructive request by the firm to withdraw from registration. Following notice and a 60-day opportunity to stop the withdrawal process, the board could deem their firm's registration withdrawn. In just a moment, I will be asking Vince Meehan to provide an overview of the proposal. Before doing so, though, I want to recognize several individuals who made significant contributions to this project. From the Office of the General Counsel, I want to recognize and thank the terrific work of Vince, as well as Matt Golden and Drew Dropkin. From the Office of Economic and Risk Analysis, I want to thank Martin Schmaltz, Eric Durbin, Josh White, Hannah Lee, and Min Rand for their partnership and support. From the Division of Registration and Inspections, I want to thank Carol Swanaker and Davina Glasgow for their assistance. And I also want to thank staff from other offices and divisions, including Noah Berlin in the Division of Enforcement and Investigations. Lastly, I want to thank the Securities and Exchange Commission staff, including the staff of the SEC's Office of the Chief Accountant, for their support and assistance throughout this project. Vince Meehan of the Office of the General Counsel will now provide an overview of the amendment, and then Martin Schmaltz and Hannah Lee from the Office of Economic and Risk Analysis will provide some additional remarks before Vince closes with our recommendation. Vince, I will now turn it over to you.
Thank you, James, and good afternoon, Chair Williams and board members. I'd like to begin by providing an overview of the recommended amendment, which, as mentioned, relates to constructive requests to withdraw from registration. We are recommending that the board adopt an update to the PCAOB's withdrawal rule, Rule 2107, that would add new paragraph H to that rule. This change would improve the PCAOB's registration program by clearing from registration firms that have ceased to exist, are no longer operational, or that no longer wish to remain registered with the PCAOB. Currently, a firm can only be removed from PCAOB registration if it requests leave to withdraw from registration, or if the board revokes the firm's registration as a disciplinary sanction. Rule 2107H would build on the PCAOB's current withdrawal framework and let the board consider a firm's lack of action, not paying annual fees and not filing annual reports for at least 2 consecutive reporting periods as a constructive request from the firm for leave to withdraw from registration. Rule 2107H has procedural safeguards that are built in, including written notice to the firm's primary contact with the board, public website notice, and a 60-day opportunity to stop the withdrawal process by emailing the registration staff. after the 60-day window passes without the firm contacting the registration staff, Rule 2107H would permit the board to treat the firm's consecutive failures to file annual reports and to pay annual fees as a constructive request by the firm for leave to withdraw from registration and to deem the firm's registration withdrawn. We received 18 comment letters on the overall registration rulemaking project, which was proposed in February. About half of the comment letters addressed constructive withdrawal requests under proposed Rule 2107H, and all of those letters were supportive. The bulk of the comment letters the board received were with respect to other proposals, specifically proposed Rule 2400 and a proposed amendment of PCAOB Form 3. The staff is not recommending that the board adopt those proposals at this time. We continue to consider next steps on those other proposals. I'd like to highlight two notable changes from the proposed version of Rule 2107H. First, registered firms would have 60 days rather than the 30 days originally proposed to stop the withdrawal process by notifying the registration staff that they wish to remain registered. Second, with respect to the effective date, the Rule 2107H process could be based on unfiled annual reports and unpaid annual fees for reporting years 2025 and 2026 rather than 2024 and 2025 as originally proposed. Before I yield the floor to my colleagues in the Office of Economic and Risk Analysis to present their analysis of the rule amendment, I'd like to publicly recognize and thank several individuals for their contributions to this recommendation. First, I'd like to thank Chair Williams and her staff, as well as all board members and their staffs, for working closely with the Office of General Counsel to draft the amendment. I'd also like to thank my colleagues in the Office of General Counsel, including James Capoli, Matt Golden, and Drew Dropkin, for their invaluable input and guidance throughout the process in the run-up to this recommendation. I'd also like to thank my colleagues in the Office of Economic and Risk Analysis, specifically Martin Schmaltz, Eric Durbin, Josh White, Hannah Lee, and Min Ran, as well as John Cook and Shayna Vereen for their insights into the economics of the amendment. And finally, I'd like to thank the SEC staff, including the staff in the Office of the Chief Accountant, for their support with this project. And now I'd like to invite Martin to say a few words about the anticipated economic consequences of the amendment. Martin?
Thank you, Vince. Good morning, Chair Williams and board members. The Office of Economic and Risk Analysis has performed an economic analysis of the amendment to Rule 2107. As always, the economic analysis includes establishing a baseline of firm performance under today's rules, identifying a need for rulemaking, evaluating the economic impacts of the amendment, and assessing reasonable alternatives. We believe the economic analysis contained in this release faithfully and even-handedly sets out the likely economic effects of Rule 2107H. I'll now turn it over to our senior financial economist, Hannah Lee, to present the details of our analysis.
Thank you, Martin. We found that as of the end of August 2024, among the firms that were required to file annual reports and pay annual fees for reporting years 2022 and 2023, 80 registered firms failed to both file annual reports and pay annual fees, which is an overall rate of just under 6%. Additionally, 58 of these 80 firms failed to both file annual reports and pay annual fees for 5 consecutive reporting years. The presence of such firms on the PCAOB's registration records may disrupt the PCAOB's regulatory objectives, such as maintaining an accurate public record of operational registered firms that wish to remain registered, but also precludes efficient use of staff time and resources, which diminishes the PCAOB's ability to fulfill its investor protection mission. The presence of such firms could also lessen the quality of information provided by the PCAOB on its website. Rule 2107H would address the need to make the PCAOB's oversight more effective and efficient by providing an effective procedural mechanism to withdraw from PCAOB registration firms that have ceased to exist, are non-operational, or no longer wish to remain registered. Such an improvement could provide informational benefits to investors, audit committees, and other stakeholders by reducing their information search and processing costs. Additionally, it would reduce the gaps in information about the operational status of registered firms. Rule 2107H would impose potential incremental costs only on operating firms with at least 2 years of consecutive delinquencies. For any firms that wish to remain registered, they would incur the cost of stopping the withdrawal process under Rule 2107H by preparing and submitting an email to the PCAOB, notifying the staff of their desire to remain registered. For firms that no longer exist, are non-operational, or no longer wish to remain registered, we do not anticipate any costs with respect to being removed from the PCAOB's registration records. I thank our colleagues in the Office of the General Counsel at the PCAOB and the SEC staff for their support in developing the economic analysis. I will now turn it over to Vince to present the staff recommendation.
Thanks, Tim. In closing, the staff is recommending that the board adopt the amendment to existing PCAOB Rule 2107 and issue an accompanying adopting release in substantially the form provided to you. Instruct the staff to submit the amendment to Rule 2107 to the SEC on Form 19B4 for the Commission's approval pursuant to Section 107B of the Sarbanes-Oxley Act, and request that the Commission determine, to the extent that Section 103A3C of the Sarbanes-Oxley Act applies, that the application of the amendment to the audits of emerging growth companies is necessary or appropriate in the public interest after considering the protection of investors and whether the action will promote efficiency, competition, and capital formation. Thank you.
Thank you, James, Vince, Martin, and Hannah. At this time, my fellow board members and I have an opportunity to make a statement or ask questions of the staff. We will proceed in the order of seniority, and I will begin. Today, we are considering an amendment to existing PCAOB Rule 2107, withdrawal from registration, that would strengthen investor protection by improving the quality of information provided on the PCAOB's website. Specifically, this amendment would enable the board to treat a registered firm's failures to both file annual reports with the PCAOB and pay annual fees to the PCAOB for at least 2 consecutive reporting years as a constructive request for leave to withdraw and to deem the firm's registration withdrawn. The amendment would then allow the board to withdraw the registration of a firm that no longer exists, is no longer operating, or no longer wishes to maintain its registration with the PCAOB. Firm registration is a cornerstone of the PCAOB's operations. Firms are required by the Sarbanes-Oxley Act to register with the PCAOB in order to perform audits of publicly traded companies and SEC-registered broker-dealers, or to play a substantial role in those audits. In addition to registering, filing an annual report through what's called Form 2 allows the PCAOB to keep track of the firms that are eligible to perform those audits and to understand which audits, if any, they are performing. In turn, the PCAOB then uses that information for many purposes, including planning its inspections program, which inspects over 800 issuer audits in more than 30 jurisdictions around the world each year. However, as of August 31st, 2024, 80 registered firms had not filed annual reports and had not paid annual fees for both the 2022 and 2023 reporting years. These firms include, for example, sole proprietorships that remain registered even though the sole proprietor has died, firms that registered with the board years ago but now appear to be defunct, and small firms, often in foreign countries, that cannot be reached through the primary contact person designated by the firm. In 2010, 13 firms failed to file their annual reports and pay their annual fees. Excuse me. And those 13 firms have failed to file annual reports and pay annual fees every year thereafter through 2023. Each year, we add to the count of firms that are consistently non-compliant. A firm's failure to meet the annual reporting and fee requirements prevents the PCAOB from maintaining an accurate list of registered firms that exist, are operating, and want to maintain their registration status. It also prevents the PCAOB from ensuring that Form 2 information is reported to the public for all registered firms. This means that the PCAOB's list of registered firms does not provide audit committees, investors, and other stakeholders with the most accurate list of firms that wish to maintain their registrations with the PCAOB. It may increase the amount of work these stakeholders must do in selecting an auditor. A firm's failure to file can also create additional work for PCAOB staff trying to track down information from firms that may or may not be responsive. After presenting the proposal in February and asking for public input, PCAOB staff made changes to the amendment based on the feedback we received, including a suggestion to give firms additional time to let, the PCAOB know that they want to remain registered. If adopted, the amendment would give firms 60 days after written notice from the PCAOB to send an email to the PCAOB's registration staff to stop the withdrawal process and remain a PCAOB registered firm. Our original proposal required that firms respond within 30 days. The extended time period is designed as an additional safeguard for firms that are delinquent but wish to remain registered. Auditors play a vital role in promoting trust in our capital markets. Maintaining that trust requires transparency and accountability, and this amendment would be another step toward improving the quality of information available to investors, audit committees, and other stakeholders on firms registered with the PCAOB. I want to thank everyone who submitted public comments. Your input helped to shape this amendment. I would also like to express my gratitude to those individuals who have significantly contributed to this proposal. Specifically, I want to thank James Capoli, Matt Golden, Drew Jopkin, and Vince Meehan in the Office of the General Counsel, Hannah Lee, Min Ren, and Josh White in the Office of Economic and Risk Analysis, Carol Swanaker and Abina Glasgow in the Division of Registration and Inspections, and Noah Berlin in the Division of Enforcement and Investigations. I would also like to thank my fellow board members and their staff for their contributions. And finally, I'd like to thank the SEC staff for their support and assistance. I will now turn to my fellow board members for any statements they may wish to make or questions they would like to pose to the staff. Board Member Ho, the floor is yours.
Thank you, Chair Williams. On June 12, 2024, I supported the release of the proposal, which included two separate PCAOB rules. For example, I supported the proposal to amend existing PCAOB Rule 2107, withdrawal from registration, by adding a new subsection H. I stated that the proposed new subsection H is a good housekeeping matter by which the board could deem registered firms that have not fulfilled certain statutory obligations under the Sarbanes-Oxley Act of 2002 to have constructively withdrawn from registration. After reading each of the 18 comment letters we received, I continue to believe that the amendments to PCAOB Rule 2107H is a good housekeeping matter. and I will support the amendment. I am pleased by the revisions made by PCAOB staff in response to the comment letters. Specifically, the proposal afforded firms 30 days to stop the constructive withdrawal process, but the amendment we are voting on today affords firms a 60-day period based on a comment we received. Notwithstanding my support today for this good housekeeping rule, I am deeply concerned about the possibility of the PCAOB adopting in the weeks ahead a series of midnight regulations that could overwhelm the institutional review process, both here and at the Securities Exchange Commission, that helps ensure that regulations have been carefully considered, are based on sound evidence, and can justify their costs. Moreover, correspondence from at least one member of a relevant committee of Congress has called on the federal financial regulatory agencies to suspend the proposal or promulgation of any regulations before the end of the current administration. Modernizing our standards and rules is important, but if we rush to get things done before any changes in the composition of the commission, we could end up wasting taxpayer dollars by adopting ill-considered rules and running our professional staff ragged while at the same time undermining the democratic process. I want to thank Vince Meehan in the Office of the General Counsel and Hannah Lee and Min Ren in the Office of Economic and Risk Analysis for their hard work and their responsiveness to my questions. I now have a question for the General Counsel. Mr. Capoli, where does the adopting release explain why we are not voting today on proposed Rule 2400 and the proposed amendment to Form 3?
Thank you, Board Member Ho. As we previously previewed with your staff, the project you're asking about is not on the table today, and is not the subject of today's meeting. So I think questions about that proposal are really better suited for private discussions. Be happy to answer any other questions.
I am concerned about the PCAOB's lack of transparency here. We seem to have little hesitation to propose and/or impose voluminous public disclosure and reporting requirements on firms because it would enhance firm transparency. Yet we choose not to be transparent ourselves. Don't you think that we owe commenters and other stakeholders to provide some explanation? As a regulator, it is important for us to walk the talk and not just talk the talk. We owe it to investors and other stakeholders to be more transparent. Back to you, Chair Williams.
Thank you. Board Member Stein, the floor is yours. Board Member Stein, I believe you're on mute.
Thank you, Chair Williams. Thank you for the introduction, and thank you for telling me I'm on mute. The recommendation before us today addresses the problem of what I might call phantom firms. Most audit firms registered with the PCAOB adhere to our registration rules. They file timely reports, they pay their annual fees. Not all registered firms, however, do so. Today's rule change is targeted at those firms that are registered, but they no longer follow our administrative rules, they no longer pay the required annual fees, and they no longer file required reports. So for all intents and purposes, they seem to have disappeared. The new rule would allow the board, under specified conditions, to consider a registered firm's failures both to file annual reports and to pay annual fees for at least 2 consecutive reporting years as a constructive request for leave to withdraw from registration and deem the firm's registration withdrawn. As of August 31st, 2024, there are about 80 such firms in this situation, which is a little under 6% of total registrants. Perhaps these registered firms have ceased to exist. Maybe they've decided to focus on lines of business other than auditing public companies or broker-dealers. Maybe the firms have changed ownership, or maybe the firms have simply gone out of business. Regardless of the reason for a firm's failure to maintain current reporting to the PCAOB and to pay the required fees for more than 2 years, its continued presence on a list of PCAOB registered firms can only be a source of confusion. The operation of the new rule ensures that mere mistakes made by registered firms in the filing of annual reports or payment of fees will not lead to constructive withdrawal. The delinquency must extend to a minimum of 2 consecutive reporting periods. The rule creates a streamlined and straightforward mechanism for firms to communicate their desire to remain registered with the board by sending a single email. The rule now provides 2 months for registered firms that receive a final delinquency notice from the PCAOB to respond before the board can act to constructively remove the firm from its registered status. Finally, it is important to note that firms removed from registered status under the rule are not barred from registering in the future. Before I conclude, I would also like to recognize and thank the people who worked on this project. From the Office of the General Counsel, Matt Golden, Drew Dropkin, and Vince Meehan. From the Office of Economic and Risk Analysis, Eric Durbin, Josh White, Hannah Lee, and Min Ran. From the Division of Registration and Inspections, Carol Swaniker and Abina Glasgow. I also want to thank John Abel, Bill Ryan, and Noah Berlin in the Division of Enforcement Investigations for their assistance. Finally, I would also like to thank the Securities and Exchange Commission staff, in particular the staff of the SEC's Office of the Chief Accountant, for their support and assistance. I support adoption of the rule before us today because it will help the board identify registered firms that are no longer operational and maintain the integrity and accuracy of the information available to the public. Thank you.
Thank you, Board Member Thompson.
Thank you, Chair Williams. I support amending PCAOB Rule 2107 to add a mechanism that allows the board to increase the usefulness of public information on our website about registered firms. Under Section 102 of the Sarbanes-Oxley Act, firms that prepare or issue audit reports, or firms that play a substantial role in the preparation or issuance of audit reports, must be registered with the PCAOB. Registration with the PCAOB comes with responsibilities. One of those responsibilities is that a registered firm must file an annual report on Form 2 with the PCAOB. Annual reports on Form 2, which are available on our public website, inform the public about a registered firm's practice, including the identity of clients to which the firm has issued an audit report and detail about fees the firm has billed to its issuer clients for audit services, other accounting services, tax services, and non-audit services. Another responsibility of registered firms is to pay an annual fee each year. Under the Sarbanes-Oxley Act, the board must assess and collect annual fees to recover costs associated with processing and reviewing annual reports. For most firms, the registration fee is $500. However, larger firms must pay a higher fee. Similar to the responsibilities that CPAs have to report information and pay a fee to their state accountancy boards, registered firms must comply with annual reporting and fee payment responsibilities to the PCAOB. Those responsibilities should not be ignored. Compliance with these requirements promotes investor interest, including by ensuring that recent data about a registered firm's practice is publicly available. Based on our oversight activities, we have found that certain firms are persistently delinquent in meeting their responsibilities. They fail to both file their annual report and pay their annual fees for consecutive reporting years. Each year, our diligent staff in the Division of Registration and Inspection sends out multiple notices and reminders to these consecutively delinquent firms, and in the vast majority of cases, our staff does not receive a response from such firms. Our staff should not have to chase delinquent firms in perpetuity. It is possible that many of these firms are defunct. However, given that year after year the number of delinquent firms increases, the amendment before us today makes sense. Treating non-compliance with our annual reporting and fee payment requirements as a constructive request for withdrawal, and then deeming such firms withdrawn, will enable the board to have more useful and informative registration records and will result in time efficiencies, which will enable the board to better utilize and deploy staff resources. As many of you know, my decades of executive experience in mission-focused government roles required me to lead people and significant and consequential programs. I'm a strong proponent of effective resource management that enables mission-critical work to be executed more efficiently, particularly when it advances a public good. In this case, it would be good to have registration records that do not include defunct firms. Stockholders who rely on our registration information would have greater confidence in our data. Additionally, it would be good if some of our staff time could be redirected from chasing delinquent firms to other mission-critical functions. As such, I fully support the spirit and purpose of the current amendment. In closing, I want to thank commenters for taking the time to provide valuable insight with respect to this project. Additionally, I want to thank the dedicated teams who contributed to this rulemaking process. Specifically, from the Office of General Counsel, my sincere thanks to James Capoli, Matt Golden, Drew Dropkin, and Vince Meehan. For my Division of Registration and Inspection, I want to thank the dedicated staff of registration, including Carol Swanica and Abina Glasgow. From the Office of Economic and Risk Analysis, my sincere thanks to Martin Schmaltz, Eric Durbin, Josh White, Hannah Lee, and Min Ren. Also, I want to thank my fellow board members and my staff for the time and attention to this project. And finally, I would like to thank the staff in the SEC's Office of Chief Accountant for their assistance with this project. Thank you.
Thank you. Board Member Bodick, the floor is yours.
Good afternoon, and thank you, Chair Williams. I am pleased to support the adoption of new paragraph H of Rule 2107, withdraw from registration concerning constructive withdrawal requests. One area of focus for me over the last year has been the need for increased transparency. I believe that improved transparency and accessibility of PCAOB oversight activities on our website, in particular registration and inspection information, will help to better inform and equip investors, audit committee members, academics, and other stakeholders to understand not only our work, but to also make better informed decisions. While I am hopeful of more efforts in this regard, I've been pleased with our work to date. Hand in hand with promoting transparency comes the responsibility to do our best to ensure that the information on the PCAOB website is not only accurate, but also useful and informative to a wide variety of stakeholders. The registration process is at the heart of our oversight activities, and the accuracy of the related firm information is essential to allow us to fulfill our statutory mission to protect investors and further the public interest in the preparation of informative, accurate, and independent audit reports. Users of our registration data deserve accurate and current information. Accordingly, in addition to a required annual fee, PCAOB rules mandate that each registered firm file an annual report or Form 2. There are a myriad of reasons why a firm may not be current filing its Form 2 and paying its annual fee, and registration staff can work with firms to resolve them. But registration staff resources are not being deployed effectively when they must send reminder communications to registered firms that have neither filed their annual reports nor paid their annual fees for multiple years. The PCAOB's current strategic plan includes a goal for organizational effectiveness. The amendment before us today will allow us to use our resources more effectively. This rule amendment is a sensible and practical approach for all parties. While I am pleased to support this amendment to Rule 2107, I am also pleased with that the amendment includes several safeguards to ensure withdrawal is consistent with the firm's intent. First, this rule is only activated if a registered firm misses at least 2 consecutive Form 2 reporting years and has not paid the annual fee for those years. Second, the board in its discretion commences the Rule 2107H process by sending a written notice of delinquency and impending withdrawal to the registered firm's primary contact with the board. This provides the firm notice of the commencement of the Rule 2108H process, the reasons for the commencement of that process, its potential significance for the firm's registration, and the firm's opportunity to avoid withdrawal by sending an email to the registration staff within 60 days. The board will also note the firm's status on the PCAOB website. Firms will have at least 2 means of being made aware of the board's planned action: direct communication and notice on the public website. The operation of Rule 2107H is tantamount to any other withdrawal from PCAOB registration. For example, the firm will be prohibited from engaging in the preparation or issuance of an audit report for an issuer or broker-dealer or playing a substantial role. Likewise, a withdrawal under Rule 2107H would be reflected in the PCAOB's website as a withdrawal from registration and would not be reported as a disciplinary sanction. The firm would also retain the ability to perform work on audits of issuers and broker-dealers, provided the work remains below the substantial role threshold. The firm could also seek to re-register in the future by using Form 1. These mechanisms are all practical and are akin to a firm-initiated withdrawal, as opposed to a board-initiated revocation. In my statement in support of this rule at proposal, I noted that the PCAOB's registration provisions provide the gateway for accounting firms to perform audits of public company financial statements and to serve their vitally important role to support our capital markets. Efforts like this amendment make our registration information more useful for stakeholders and support our public interest mission. I want to thank all those who took the time and the effort to submit comment letters. Your comments are always valuable and help us to arrive at better conclusions. And thank you to the staff for their dedicated work on this project and responses to my questions throughout the process. I extend my gratitude to the staff in the Office of the General Counsel, the Office of Economic and Risk Analysis, the Division of Registration and Inspections, and all others who contributed to this project. Thank you.
Thank you. I will note that our expert staff is continuing to consider next steps relating to other aspects of the proposing release that the board is not adopting today. Unless there are any further discussions from the board on the matter that is before us today, I'll now call for a vote on the staff's recommendation. Board Member Ho.
I support the recommendation.
Board Member Stein.
Aye.
Board Member Thompson.
Aye.
Board Member Bodick.
Aye.
And I support the recommendation. All votes are unanimous. The recommendation is approved. That concludes the PCAOB's open meeting for today. As there is no further business, this meeting is now adjourned. Thank you for your participation. You may now disconnect from the webcast or teleconference.